Hey guys, Akil Stokes here. Welcome back to another episode of the Trading Coach Podcast. In today's episode, I'm going to share with you an interview I did with a new trader friend of mine named Alex. Alex has a podcast called Be the Trader. That's the letter B, the Trader. You can check it out on Apple. You can check it out, I'm sure, on every other podcasting site as well. And it was a really cool interview. One of my goals of doing interviews and why I typically always say yes isn't just because I love talking about myself. I actually hate talking about myself. But if you have someone that is good at asking questions, it usually requires a thoughtful answer. And typically when you have to give a thoughtful answer, sometimes you discover something new about yourself. And that's something that happened in this podcast. So it's an awesome episode. Lots of knowledge bombs as always. Check it out. And again, you can check out Alex's podcast. It's the letter B, The Trader, on Apple Music and all other podcasting sites. All right, let's get into it.
Welcome back to the show, everyone. I have a very, very special show for you, but I want to give you a disclaimer. In this episode, there is some dropout because of internet connection with my guests. So it's going to sound a little weird at some points, and I actually highlight that and tell you that I cut that part out and inserted the new, obviously clear audio. So just bear with me there. Otherwise, enjoy the show. And don't forget, check out bethestory.net. B, just the letter B, thestory.net. And let's get started. Welcome back to Be the Trader podcast. Today, I have a very special guest, Akil Stokes. He's a trading coach, co-founder of Tier 1 Trading. He's also featured in Forbes as one of the leaders in trading education. And not only that, but if you're interested in track, he's also a track coach. Akil, welcome to the show, my friend.
Hey, thank you for having me on. It's a pleasure.
Absolutely. I'm so stoked to have you here. And I want to give everyone, I know I kind of gave them a background who you are, but if you can give us like maybe a quick couple of minutes introduction on what got you into your journey to begin with.
Sure. And I'll try to give you the quickest version possible. And I see what you did there. You're stoked to have me on, Akil Stokes. So very, very clever of you, whether done purposely or not.
We'll leave it at that.
There we go. But I got into trading really because it was just the next line of investing. I was fortunate enough to have a father that did his best to teach me about to really keep me financially educated. So as a very young child, he taught me about the value of saving money, of earning money. And as I got older, the piggy bank turned into a savings account turned into a certificate of deposit to a money market account. I even had some bonds that he had purchased for me and used to explain kind of, hey, I bought this for this much. They're worth this much now, but if you hold them until blah, 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 the expiration date or the maturity date, they'll be worth this much. So he always did a good job of just explaining how money worked. And when I graduated college, there were some of those, I had some graduation money. It was kind of like the last, I remember he said, this was the last time you'll probably ever get money, right? You're 21 years old. People don't give money for birthdays or anything anymore. So he's like, milk the family. So I remember I sent out letters and graduation cards, sent out pictures to all my family members. And I got some good money for graduation. And he also gifted me some of the savings bonds that I had and gave me the option to either, let them mature or cash them out. And I talked to him because I graduated. I had no idea what I was doing. I actually went into grad school mainly because this was right around the beginning of the recession. I couldn't get a job, and I was embarrassed to kind of tell family members. They always ask, what are you doing? And I'm like, I don't know. And he just pointed me into the stock market. He said, well, this is the next form of investment, learn about the stock market. And I started learning about it. I met a local businessman who became my business mentor, and just fell in love with it. And that's kind of what got me into the market. So it started off as just kind of the next step in kind of my financial journey. And it ended up being something that I really loved, really enjoyed. It was like a puzzle that I couldn't quite figure out, yet every day I tried my hardest to figure it out.
Isn't it crazy how that moment where you were embarrassed and didn't want to share with people and say that I'm not going, I don't know where I'm going to be. I don't know where I'm going to, get a job at. Cause I felt that, when I graduated, I wasn't fortunate like everyone else. We say everyone else, but the other people who did get like that,
Yes.
Verizon, Southwest, those big companies right off the bat. And now look where you are now and where it took you. It's just crazy the path that's laid.
Never would have imagined in a million years I'd end up here. Here's the funny thing, right? So I've got some mom issues, right? We won't dig into those, but because of those mommy issues, I've purposely avoided psychology. She was a psych professor at a small business consultant, and I guess she had some issues. And I also changed my majors in college because I was basically almost failing my business courses. I had like a D in both micro and macroeconomics. So I avoided micro and macroeconomics in numbers because I didn't think I was good at math, or I was underprepared at math. And I avoided psychology because I didn't want to be like my mom. And then lo and behold, I'm in the financial markets where one of the main holy grails to success is trading psychology. So it's,
Right.
I'm right back. It's like I was meant to be here for some strange reason.
Oh my
Weird.
God, that's so funny, and it's crazy that I mean you mentioned psychology, and how you're back into the world of psychology and how you kind of encompass how psychology is trading.
Yes.
Talk about that because I agree with you 100%. Like that is what trading is.
Yeah. The more experience, and I love trading because you learn so much more about yourself. I've learned more about myself through trading, and maybe it's just going through this period of going from someone in their 20s to their 30s and whatnot, and just growth in general. But I've learned so much about myself, pros and cons, through trading and through psychology and how I handle myself in the markets. But trading is, and I tell new traders this all the time, or just people that, I approach a lot of people, they know what I do, and they're like, well, I can never do that. And I tell them that trading isn't even about the numbers at all. It's, I know people, these gurus make it seem it's about these numbers and all these stats and whatnot, because that's how they make themselves seem smarter than you. But the market is all about, it's really crowd psychology. That's all it really is. It's understanding how us as people operate, right? If for the technical traders out there, if you look at a price chart is nothing more than a visual representation of all of the participants in the market and all of the actions that they are taking, right? So you can see greed, you can see fear, you can see panic, right? You can see all of that stuff, euphoria. You can see all of that stuff on price charts. And when it comes to trading, it's really more about understanding and being able to make predictions based off that understanding. How are people going to react if this type of event comes out? Or how are people going to react if price comes down to this level? And it's really no different than, I use a grocery store example all the time because I think that's one of the best ways you can look at basic economics, right? By the way, if your listeners haven't read it already, great book, Basic Economics by Thomas Sowell. No number, no math. It's all about relationships. And it's the same thing where it's like, we just had let's say I'm here in Pennsylvania, where it snows during the winter, right? So let's say we get on the news where it's like massive snowstorm coming this weekend, blah, 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 1,000,000 feet, right? What are people going to do?
I'm going to the grocery store.
Exactly. And what are people going to buy from the grocery store? We always buy the same type of products. Was it milk, bread, and eggs? That's what everyone buys,
And
right?
all that canned food.
Yeah, exactly. So you can think about it from a psychological perspective, right? If I'm a grocery store owner and I know that, snowstorm was announced, people are going to rush to before the snowstorm, right? What can I do supply and demand wise? I can probably raise prices on all of those items and they're still going to sell. People are still going to buy it. So it's just understanding, like we just said, if there's a big call for this crazy snowstorm, then people are going to panic and go to the grocery store. If people are going to panic and go to the grocery store, then they're going to look for these type of items, right? We've just predicted what people are going to do because historically that's what they have done. We're doing the same thing in the markets, just obviously without the specifics of grocery store and snow. We're doing it with price levels and whatever asset we're trading.
Absolutely. And whatever news catalyst, maybe that's the snow, right? That's like the catalyst that sets it off.
Exactly. Yep. Yeah.
It's crazy. You said the crowd, you're trading the psychology of the crowd. And really, I don't know about you. I'm sure you experienced this too. But, for my beginning, when I started trading, I am the crowd. I was part of the crowd for quite a while, almost for I almost want to say a year, where I was just trading off of emotions all the time. And so I think that experience really helped me understand the crowd though, like after the fact. So it's something I appreciate. What about you?
Yeah, I would say more. I used to, um, I was a guy that used to watch. I would have CNBC and Bloomberg and all that stuff on, and my reactions, whether purposeful or not, were all based off what they would say. I remember kind of like you as a younger trader, where I'd have CNBC on, and they're like, you gotta buy gold, buy gold, buy gold. And I go to the charts like, yeah, time to buy some gold. Like I didn't care what I saw. I just had to buy gold because I was in this. There was so much urgency on the news telling me to buy gold. I just felt like I had to do it. And I was just a sheep following everyone else. And then I'd buy gold, and gold would sell off, and I'd be like, oh, what happened? And I was the sheep. Yeah, I was the crowd. So that I definitely understand how that happens.
Yeah, and I'm gonna steal that metaphor you gave or analogy, the whole grocery store. I love that, man. That's so great. I love that, especially when you explain to friends and family like what you do and how simple it can be narrowed down to. It's pretty much it. I mean, that's a good way of saying it. And what's interesting is we haven't even mentioned what type of trader you are, but the fact that we could still talk about the same thing, even though we trade two totally different markets, is just shows you how it really comes down to that trader psychology. And I love, you actually talked about recently on one of your shows, which is called, I think I mentioned this at the beginning, but it's a Trading Coach podcast, which I love, by the way. I listen religiously. But you mentioned something about, I don't know if it was most recent or like last week, because you air one like, I feel like every day. But it was one. Yeah,
too many times.
Yeah, so it was one where you were talking about, you really narrowed down about being a trader, like in the traders, like how to be a trader mindset rather than just evolving as a trader rather than becoming like a strategy, like only a strategy. Because at first, myself, I'm going through that phase where beginning, then I went to be only strategy. And now I'm starting to see, and now when I hear your episode, that clicked with me. I'm like, he's so right. Like it's evolving as a trader. Once you learn how to be a trader, then you just learn the real true. You go back to the basics. Just like, I don't know about you, I'm a martial arts. I was a black belt. I love martial arts. And so you end up going back to the basics. Like that's how you become a professional. Like you go back to just do your roundhouse kick, your side kick, and you just master that. Like Bruce Lee says, I'm scared of the man who does 10,000 kicks, to practice with 10,000 kicks of one kick rather than those 10,000 separate kicks. And I think that's what you hit on the head on your show. And man, that was, I think that's so true. And because you trade Forex, right?
Correct. Yeah.
And so tell me what got you into Forex? And that's a long introduction to that, but I wanted to get to, why Forex?
Well, yeah, I respect it. My kids, my oldest is in Taekwondo, so I'm there almost every Thursday watching them. And they, same thing. They're just teaching these basic movements, basic kicks. And at the end of the day, that's all that matters. Even as not to get too distracted, but even as a track coach, I look back now, like I would have been a much greater runner if I would have known now what I did, or if what I knew then, what I know now, I would have been a much greater runner, because it's all about the basics. Doesn't matter what event you use or what event you do. It's all kind of these basic movements and motions. And if you can master that, you could do anything. So I agree 100%. I got into Forex, a little embarrassed to admit this, because I thought it was a get-rich-quick scheme.
Yeah.
That's, I'll be honest with you. The internet told me I can make a lot of money really, really quickly. And that's why I got into Forex. I had a pretty decent career in stocks. The issue for me at stocks is that it was slower moving. I was more of an investor.
So here are one of those moments where the mic dropped out due to internet connection, but let's pick it back up. Here we go.
I was in the stock market. I did pretty well in the stock market, but the stock market moved a lot slower. I was more of a short-term investor versus a trader. And I only had so much money, so I can only have so much exposure. So, once my money was tied up in certain stocks, I couldn't really do anything. I made decent returns, but it also meant kind of holding things for months and months and months. And based on the capital that I had, the returns were good percentage-wise, but, back then I expected some type of life-changing return. And as I got more into the markets, I wanted to become a full-time gig. and just what I was making, or at the rate I was making in the stock market, it wasn't going to happen. So I tried penny stocks for a little bit. I failed horribly at penny stocks. That was a big failure, mainly because I had no idea what I was doing. And I got into Forex because the whole thing was, hey, Forex is highly leveraged. It's a much more aggressive market. You can basically make more money in a shorter period of time while using less money. And that was just everything I wanted to hear. And that's really, once I got into Forex, that's when I really started focusing on the technical side of trading more than, say, kind of the fundamental side.
And so Forex, I'm ignorant to Forex. Like I trade stocks and small caps, big caps. And so now I kind of try to stay in my lane. I'm still trying to master this section. Yeah. And so I'm curious, is Forex something that's like 24/7? Is that the?
Yeah, it is.
It is.
So
are you trading how are you trading at night? Like, does that appeal to you too? Like, because you can kind of have that flexibility, or is there only certain prime times that you really like to be focused? You know what I'm saying?
So it's 24/7 it's a gift and a curse, depending on you as a trader. I don't spend nearly as much time in front of the charts as people would think. I think people assume that, because it's 24/7, you've got to be in front of your charts 24/7. But as you mentioned, there are more active times, right? There's two major sessions. It's going to be the London session and the U.S. session. So the London session, my time, which is New York time, is basically starts at 2 a.m., because that's their kind of wake up. That's 7 a.m. London. And then the New York session starts here about 8 o'clock. And after it ends at 5 p.m. So once those two sessions are done, the markets tend to slow down. But because it's an international market, there's always just 24/7 news coming out. The markets, it never stops. And that can be an issue for many traders because they believe that they have to spend all their time in front of the charts. What I do is I have a strict routine. I have a strict routine of when I actively trade. I have a strict routine of when I do my analysis on the chart. And my type of trading, I don't need to look at the chart 24/7. I can do my analysis. I can set up my entries or put things on my watch list, and then get away from the charts as much as possible.
So is it something because this is appealing to me just because, if you're working full time, mm-hmm. Is it something you could trade when you get off of work? Is it kind of, or is there only when I meant by prime time, mm-hmm. Now as a day trader or stock trader, it's mainly, my prime time is at the open for the first hour and I'm pretty much done for the day. Mm-hmm. So I didn't know if there's prime time areas or if you could get off of work and say you're working at 9 to 5, you get off at 6, 7 o'clock, you want to pull up the markets. Are those too illiquid? You know what I'm saying?
Yeah. I know people that are successful trading anytime. The liquidity definitely dips after the New York close. So if I had to pick a prime time, now one of the cool things about Forex being 24/7 is, again, you can actively trade it and work it around your schedule. So, I've got people that are truckers that work at night and trade in the morning or vice versa. So that's one of the benefits of it, especially if you're going to be an active day trader. I think the best time to trade is anywhere between that London Open and really the midpoint of New York. So I think the lunch break in New York is about 12 p.m. That's also about the closing time in London. There are going to be moves that happen after that, but if there's a sweet spot that you really want to trade, it will be anywhere between the London Open and then the London close, basically. I personally trade with my day trading. I do kind of the London lunch to kind of I do from about 7:30 a.m. to about 10:30 a.m. So it's that kind of overlapping period between the opening of the New York session and the end of the London session.
Nice. And you're referring to 7:30 a.m. your time, right?
Yeah, 7:30 a.m. New York time. Yeah, it used to be 8:30. I bumped it up a little bit earlier just to kind of. I've got a lot of clients that are overseas, so it works for some people better that way. Like people that are in Australia, they're not up, 12 o'clock in the morning.
Oh my God, yeah.
Checking it out. So I bumped it up. I used to start at 8:30. Now it's 7:30, just kind of for the business standpoint.
Nice. Well, I want to ask you a question that I'm not sure if someone's asked you before when they interviewed mm-hmm. you, but if they did, just bear with me. I want to know, and these kind of sound similar. There's going to be 3 questions in a row that I wanted to ask you, but they're definitely not similar, and I'll explain them once I ask, and mm-hmm. I'll feel embarrassed if they are exactly the same. But biggest challenge as a trader, what What is your current biggest challenge as a trader? Because no matter who you are, no matter where you're at in your journey, whether you're a professional, whether you're teaching, whether you're coaching, just like you said, you're always learning, and you preach that a lot through your podcast. So I want to know what's at your current status. What's your biggest challenge?
My current biggest challenge as a trader is focus. One of the downsides, and I tell the aspiring traders I'm working with, we always talk about using trading to, you don't have to trade full time and think all of your money has to come off of trading. You can grow a business out of it. And there are different aspects of the business. You can become a coach. You can become work for a prop firm. But as soon as you grow your trading into a business and you do other things, whether it's managing money as well, you start to split your attention. I think trading is I know trading is very, very, very difficult. It's something that requires a 100% focus just for survival. And one of my biggest challenges is that because I'm also focused on helping so many clients out there, I tend to spend less focus on myself. So I make more trading mistakes. I miss more trades because I'm helping someone else instead of looking at an opportunity on my own. And I don't evolve at the same rate. So I'm actually in the time right now where I've given myself 6 weeks to kind of work on my own trading, review my stats, focus on some new concepts that I want to kind of implement. But for the rest of the year, aside from these 6 weeks, I don't get to do that. So I've slowed down in my evolution as a trader, mainly because the focus that I would normally put into that is now put into helping others become consistently profitable. So it's not a negative per se, because I understand it and I accept it. But for my personal trading, it does damage the progression of it.
No, I get it. And I mean, it sounds like you're a coach, a track coach, you're a teacher, coach and mentor for trading. So it just seems like that spark in helping people when they get that moment is probably more valuable than when you catch that trade.
Yes. Yeah. I feel good about what I'm doing. So I don't mind that sacrifice at all. And it's funny, a lot of people don't understand that. A lot of people think it's all about the money. It's all about providing value.
I get that. I used to, just not to go off on a tangent, but I was a VP of a firm in Dallas and I trained salespeople, and I get it. Like, I love that spark. Mm-hmm. And so I'm curious though, because since you brought up, when you're training or teaching people and you might miss opportunities on your own. Now, just about when you're coaching others, since you talk to many traders, through Instagram, Twitter, heck, even the people who sign up. You talk to me, and I'm not even part of your program. So it's like you talk to many people. So I appreciate that, and so I'm curious on what do you feel like has been either the biggest misconception when it comes to someone who may be they're not a beginner, right? They've been trading for maybe 6 months, maybe a year. So that's still beginner, but like they know the basics, at least like the lingo and all of that. But I'm curious on what do you feel like is, besides them saying, hey, tell me what to buy. That's a question that everyone freaking thinks that this is important, which is not. But I want to know what's a common question when you're like, okay, this guy, he understands trading, but there's something missing. What's that common thing that's missing? And here's another spot where we had complications, but let's get it started.
Okay, so the biggest misconception I would say, and I guess I would choose two, is one, I think people, and you mentioned this earlier, people don't take enough time to focus on the basics. Everyone is worried about the strategy, where they never master kind of what's behind the strategies, the basics of price movement and how markets move and stuff like that. So they're missing kind of some key components that are needed in order to get their strategy or any strategy running the way they want it to. That's one. I would say another one is just what is available through trading. I think a big misconception out there is kind of the get rich quick part of it. And I got a message the other day from someone saying, hey, I'm averaging 10% a month. I just wanted to know if that's good or blah, blah. And I said, yeah, that's fantastic, man. If you can average 10% a month, month over month, you're making a 120% return a year. you're going to be one of the
That's
best.
really good. Yeah.
Yeah, and I think people just don't understand what consists of a good return and what doesn't. And because of that, they perhaps put too much pressure on themselves. Maybe they dump trading systems that are actually really, really good, but because it doesn't produce them $1 million overnight, they don't think it's good. So I think kind of once people understand that reality, I've seen massive changes in just how they handle themselves because they no longer have these unrealistic expectations of what can really be had from trading.
It's social media, man. That's what I mean.
Yeah, it is.
What it is. That's what it is. I mean, it's rare to find. You know how many people are blocked on social media who just post P&L? You know, like it's just crazy, man. So, you know, that leads me up to what I'm curious on for yourself and personally.
Mhm.
Wherever this question, you know, wherever idea comes to mind, or whatever thought memory comes to mind, is what I'm curious about. Is what was the scariest moment when you were trading that you experienced?
I lost about $30,000 within basically a week.
Oh my God,
That was
my heart.
yeah. It was really like a month to give myself a little bit more credit, but the bulk of it was within a week.
Yeah.
And this is when I was managing money. I started a money management business after finally becoming successful in trading, and I was doing everything the right way. And I was making a small, consistent return. I think I was making like 2 to 3% a month, which was my goal. Very, very low risk attached to that, and you know, I was right on track. And the problem was I was new and I was spineless, and you know, back then I was so eager to get the business off the ground because I needed it to be a full-time trader, that I kind of gave in to like whatever the client would say. So I'd send these reports and, to the client and whatnot saying, hey, another good month, blah, 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 blah. And then, at first he was like, oh, cool, that's okay. And then he started asking questions, well, why aren't we making more money? And he had a misconception again of what was realistic about trading and investing. Because I'm like, well, 2% a month, 3% a month with, on the capital that we're trading and low risk, this is perfect, right where we need to be. And he's like, yeah, but you're on this hot streak right now, right? We should be trading more. And I'm like, no, probably not. And again, spineless back then. I didn't want to lose the client. And I eventually gave in to his request to trade more. So we basically doubled and tripled the position size. And of course, we did so right into a drawdown. And there were some errors on my behalf as well. Again, I should have said no and stuck to it. I was also trading a portfolio that had a lot of correlations. There were a lot of, in this case, a lot of yen pairs I had exposure to. There was a natural disaster or something that happened. I think it was a tsunami or something. And there was directional movement on all of the yen pairs. And because I had so much exposure in my portfolio, I was in trades on all of them. They all got smashed around the same time, and I lost a lot of money. But what's worse after that, and this is the part where it really became dark, was that I became so frustrated that I stopped trading for about a week. And, I shut down the computer. I wouldn't look at the markets. I was just kind of contemplating life and what should I do? And I finally kind of, talked myself out of this dark place I was in. I went back to the charts and I saw that, here it goes, right? If I would have just traded that week, if I would have just stuck to the plan and did what I was supposed to do, because, fear in the market is people react and then they kind of analyze and like, oh, we're reacting for no reason. If I would have just followed what I was supposed to do, I would have made $60,000 back that next week. I would have doubled whatever I lost just by following the signals that came in. And that was a changing point. That was a turning point for me. That's when I realized I did not want to manage money anymore. And I had to really talk to myself a lot and kind of figure out if trading was really for me or not.
How old were you when that happened?
This had to be mid-20s. I was probably around maybe 23, 24, 25.
Oh, my God.
There. Yes. I was completely spineless, man. I had, if I were to ever manage money again now, I'd be the boss. I'd be like, look, this is what we're doing. If you don't like it, go somewhere else. Right. I have that kind of experience. I have that authority now, but
back then it was kind of like, okay, I don't think it's a good idea, but okay. And so it's a fun story now to tell you, obviously, but at the time, man, I was so embarrassed. It was just devastating because that was my life. I mean, I was a full-time trader, and I didn't have enough capital on my own to live full-time off my trading, and I finally got the business up and running, and I was making pretty good profits. I'm like, this is, clients that have a lot of money, you do good by them. They introduce you to more of their friends that have more money, and you grow your clientele that way. And I'm like, this is going to be it. This is, my road to millions. And it was just all it was washed away all at once. And it was tough.
That week off, and then you came back. I saw you can see it more clearly. Do you feel like, do you tell people now, like when they're in a rut, like maybe take a week off to kind of, do you feel it was a breather too? Like it was something that was needed?
That's interesting that you say that because whenever and it's probably the first time I'm thinking about it like this. So again, here's me. This is the value of doing these podcasts. You learn a little bit about yourself as well. I always look at it as a negative, right? I always look at it from a results perspective, saying, well, if I would have just kept trading, I would have taken the signals and I would have, made all the money back. But in reality, I don't know if that would have happened. I mean, the state that I was in, so devastated, perhaps I would have revenge traded and lost even more. You don't know what you don't know what would happen. I think, I guess I can't really give you I would need to think about it more to give you a clear answer. But I do think I tell traders this: if you're ever in a spot where you're emotionally unstable, you're probably going to do something bad. You're probably going to deviate from your plan. You're probably going to make some type of emotional decision in the market, and typically that always ends poorly. So if you ever find yourself in a state like that, I think taking some time off may have actually been the right thing to do. Because again, it's like going to the casino and making emotional decisions after you just lost some money. It's probably just going to end bad. So yeah, I always look at it as a negative part of the story, but maybe perhaps I did the right thing. Even if it missed, the result wasn't great of me missing the money, but perhaps it was the right thing because perhaps I would have lost even more just doing dumb stuff.
Yeah, it's crazy. And I mean, it's telling someone to take a break, first off, is like, it's so hard to take a break, but it's so important. And I love that you shared a story because that's what I saw. I saw like you took that break so you were able to be more clear-headed and you can see things better. I'm curious, and everyone has a tough lesson. And what I mean by tough lesson, like, I mentioned biggest challenge, scariest memory, but I want to talk about, like, there's a lesson that everyone goes through, I feel like, or we all must go through it, or maybe I'm the only one, but like a lesson that you have to learn repeatedly. Mm-hmm. What's that for you when you were coming up?
It goes back to, I always say this now, I was more focused on learning what to trade instead of learning how to trade. So it goes back to just, and it's hard, of making the emphasis on learning to read the markets and learning to understand the markets. Because if you can read the markets and understand the markets, you can trade any type of way. You can trade any type of strategy. You can trade any market because the movement is all the same. It obviously it differs from market to market slightly, just in personality and from pair to pair if you're in the Forex market. But the general concepts are there, right? Markets go up, down, and sideways. They extend, they pull back. They hold at support and resistance.
Because people are still buying them, right? It's still emotions.
Yeah, it's still the same thing. And again, the lesson I learned was I focused so much when I first started trading. I spent probably about a year, even after getting trained. I probably spent about a year just focusing on strategies and then jumping from strategy to strategy. And I remember there was a point in time where I was trading this trend continuation strategy, and I got asked by someone on the internet, hey, what trend is the euro in? And I couldn't give them an answer. And it hit me then, like, well, how am I supposed to be a trend trader if I don't even know if the market is trending or not? And I think a lot of people will do that. They will trade something, but again, they don't actually know. They're trading just a strategy, but they don't know why the strategy works. Or they're using an indicator, for example. They don't even know what the indicator gives them. Like, I use the relative strength index, for example, and you get a lot of people there like, oh, that's a reversal indicator. Well, it's not. It's a strength indicator. Like it tells you strength in the market when it when the indicator goes overbought or oversold, when it goes overbought, for example, it actually means that there's a lot of strength in the market. Now that you may use that to say, hey, what goes up must come down, blah, blah, blah.
And here's the last spot where this happens, and we are clear for takeoff.
Yeah, so a lot of people are using indicators, and again, they just don't even know what they're using them for. So the RSI is an indicator that I use for its relative strength, and I'll talk to people all the time that are saying, "Hey, did you sell it?" I'm like, "Why?" Because the RSI went overbought. I'm like, "Well, that actually means that the market is very, very strong." And you just see people that they just don't know the reason behind what they're doing. They're just looking for kind of the shortcut, and that's just it's a massive problem.
Is it safe to say, I don't want to put words in your mouth, so I'm going to ask you this, and you let me know if I'm interpreting what you're saying. Is it more of like, once you learn how to trade in terms of psychology, reading candles, understanding volume, like that's the real core of a market. Once you understand how to trade, then they're really, strategies are just, it's more like you start to see it differently. You can pretty much trade anything as long as you learn that and really learn. I mean, there's one thing to say, oh, I know what volume is, but there's another thing to know what different types of volume mean, with what kind of candle does that go with that volume, and what does the price action overall trend showing. That kind of a thought process rather than, oh, the volume's strong. You know what I'm saying? Like,
no, yeah, it's the core principles. And I think once you can do that, you can do anything. Like, going back to, you mentioned I coach track and field. I coach many different events. I coach sprinters, I coach hurdlers, I coach jumpers, right? So they're all doing kind of three different things. We spend the first probably 6 weeks, 6 weeks to 3 months of our season just teaching people how to run correctly and use their body correctly. And a lot of they're like, well, I'm a jumper. How come, why am I learning this? And then later on, they realize that, well, it's all the same movement. And once you understand the movement, how the body moves, how to put power into the ground, stuff like that, you take those core concepts and then you specify it in whatever your event is. So you take your ability to run fast and sprint, move your body the right way, and then you adapt that to the specifics of the long jump or specifics of the hurdle. So same thing with trading. You understand volume, understand support and resistance, how a price chart moves. And then you take it to a specific strategy, whether you want to be trend continuation, counter trend. But it doesn't work unless you have those core principles and core concepts understood and mastered.
yeah, I couldn't agree more. It's funny. I ran track too, and man, if only I can go back to high school now. Now, after knowing what you know now, you're just like, God, I knew I should listen to my coach. I got to keep arms close to the body. I got the block. I got to practice the block, starting off the block, kicking off the block strong. I used to not care about that stuff.
I was the same way. Just run fast.
Yeah. Oh, I just run. Well, that's awesome, man. Well, look, that's all we have for today. And Akil, look, I really appreciate this time. It was such a great time for me. I really enjoyed it, and I want to say thank you so much, and thank you from our listeners too to have you on the show.
Oh, I appreciate it, man. And again, big apologies. We've had some technical issues on my end today. That's, life seems to do that only at the important moments, I feel. So I appreciate you getting through it and the editing that you have to do to make this sound good. But I had a blast. It was a pleasure talking to you before the interview and during the interview. And it accomplished one of my goals. And you mentioned earlier that, you asked a question that made me think about something for the first time. I've never actually given it thought about the taking a week off and whether that was a positive or not. So I've gotten something out of this podcast as well. So I always enjoy that. That's big for me.